And good afternoon. This is the Elliott Wave daily update for the S&P 500 being recorded on Monday, August the 4th at 2:20 p.m. Pacific Daylight Time. It's been a really wild 3 days, Thursday, Friday, and now today. And trying to figure it out has presented its challenges. I'm sticking labeling on it, except for today, but still I have my thoughts on what has taken place and where we might be in this whole scheme of things in terms of this minute fourth wave. Now, first thing right offhand, today's rally clicked into gear right there. And I just want to go over and I'm now going to review the spiders. And the spiders finished the day at 631. So at 630, it broke above zero gamma and large gamma 2. Now prior to that, at 625, so the 625 level in the spiders was large gamma 4 and the volatility trigger. So now let's put that up there. Let's put up the spiders and let's go take a look at what happened. Of course, they always got these weird spikes in there that don't make a lick of sense. And this is the hourly chart. So we're going to come down here. There it is. I'm going to go to where I can get the half hour marking. And there's the opening. Where was the opening? The opening was at, let's just take a look. Opening was at 625.67. So the market started the session by breaking the volatility trigger and large gamma 4. Combined together, gave us this shove and a push. Now, was that shove and a push strong enough? Got us up to the cusp of large gamma 2. Played around just a little bit, decided to get above it, pulled back, and then started to break above it. Actually, here, couldn't hold it, but at the end of the day, managed to get above it to finish at, where were those spiders? To finish at 631. So right at the opening, broke large gamma 4 and the volatility trigger. Then midday towards the end of the day, broke zero gamma and large gamma 2. Power. What happened when we came in and it broke through that volatility trigger? It sent things from risk off trading, which we saw last week, back to risk on trading. What is risk on trading? Well, excuse me, that is a situation whereby they're selling the VIX, and the VIX is right. Where are you, VIX? Here. It was down $1.90, right? Goes out 1790 at 795, down $1.90. So they're selling the volatility, they're selling the VIX, they're taking that cash and they're buying the volatility of the underlying. So the underlying, the component stocks within the spiders, the component stocks within the ES, component stocks within the SPX, all based on the same S&P 500. Now, when you say, Michael, they're buying the volatility of the underlying, what are you talking about? They're buying the VIX? No. When we look at the price of options and we talk about the volatility, the historical and the implied volatility of an option, it's moving in one direction or the other because the demand for those options, the demand for them is increasing or decreasing, or that they trade much heavier than many others. If there's stocks that have like zero, basically very low volatility, or a little bit higher volatility, but they don't trade. These in the spiders, heavy trading. S&P, SPX, heavy trading. So when we start to break these levels, it shoves the market into high gear to go and to purchase the calls in the underlying, because that's what risk on trading is. If it's risk on trading and they're coming into the SPX, then they're buying SPX options. And they could be zero DTE options. They could be options that expire on Friday. They could be options that expire on August expiration. Plus, plus. Don't know. You can go and check. But underlying what's happening, that when we break the volatility trigger and then we broke uh, large gamma 2 in this case, but earlier broke large gamma 4 plus the volatility trigger. Those are big. That starts the buying because you got to cover. You got to, those positions been triggered and they should have been resistance. They were to a point, and then that resistance got broken. So what happens? Adjustments need to be made. So we get pressure to the upside. And a lot of that is coming via the fact that we're back into risk on trading. Remember, I'll say it all the time, risk on is buying, risk off is selling. What does that mean, Michael? That means that the dealer, the person that's making the market for whomever's to come in to buy or sell, they're making that market. And if the pressure's on to buy the underlying volatility, then they're usually buying the calls. And when you buy the calls, it's the dealer that sells the call. The dealer turns around and buys the underlying to hedge that position. So it is a perpetual cycle of moving higher, moving higher, moving higher, moving higher, and pullbacks being minimal compared to the rally, minimal pullback. And when we get into a situation where we're trying to count, say, for example, a B wave, well, you did get a few good spots where you had some decent rally, decent pullbacks. Nothing big compared to that rally to kick us off, compared to that rally to kind of do it. We get a little bit more. We had a little slight pullback, and then we had a rally, rally, rally right into the close. The secondary close, right? The extra hour that the market gets at the end of the day. So, what can I say about this? I still feel that this is 5 down. Now, what I may need to do, because remember, I got the other time factor going, right? I got this time factor that's really telling me, and I got algorithms that are basically saying market may surge into the fourth quarter. Fourth quarter doesn't begin until October the 1st. What are we supposed to do between August and September until we get to October where the surge may start again? Or if it's going to start early, is it going to last another 3 months? The emphasis on, I was thinking, yeah, it could. If this minute wave forward takes its time or takes a little bit more time to unfold, well, then I'm like, okay, 2 days and you're down massively and you put in 5 down. And if I'm really counting it correctly, because I'm only in a minute fourth wave, so the first leg down needs to be a minuet degree. But then I thought, okay, wait a minute. If I need to take it down one more degree, then we may have just completed at this level. Mind you, I'm taking it down another degree. It's not the minuet, it's the sub-minuet. And what would this B wave be? The sub-minuet wave A of the minuet wave A. I know I'm doing a lot of letters here, but try to follow me. And what would this be then? A sub-minuet B wave of the minuet A wave, leaving us with still a C wave down, which still could be nasty. We're going to wonder how, after today, we'll be like, well, wait a minute, how's the market going to really turn around and go down? Well, let me just remind you that new high at that level on the 31st was met with a pretty big drop. Immediately after this happened in the Globex, by the time we got it, here we were over here, and we just went down. We went down on numbers. We went down on economic numbers. We went down on Friday due to unemployment numbers, all that stuff. We don't have that kind of power this week from economic data, but we've got some other stuff going on, and they're called tariffs, and they're called trying to negotiate all of this. And we've got some nasty stuff going on the geopolitical front in a lot of different places. And we have a White House and whatever they call the equivalent in Russia saying trading nuclear threats with one another. We have some stuff going on, but yet we managed to pull off a rally today, which caught, I think, a lot of people off guard. So let me just back up and take out all that economic data and all that geopolitical fluff or rough or whatever we want to call it. What's really kind of behind what we're doing? And I'm going to say it again, it's the options trading. And when the options are trading like they are in the SPX, in the spiders, in the Qs, in the NDX, in the NQ, in the ES and the SPX, all of it, those options will demand direction, control of direction. Risk on trading inherently is buy. That's what happens. The dealer who's providing the liquidity has to buy to hedge. Risk off trading is sell. It's the opposite. So when we get these situations where we're definitely risk on, why? Because we could see it via the VIX. When the VIX is like on the other side going up, 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 because it's a fear factor, whatever it is, they're reversing those positions. They're getting out. They're making their adjustments. And that could be due to an economic number. That could be due to a geopolitical situation, but it's the way the options are trading. That's what is propelling it, stopping it, turning it, doing all the above. Okay? Keep that in mind. Now let's go back to what I just said. We came in this morning and the spiders broke above the volatility trigger and smashed large gamma 4. We had to buy. We had to cover. Not we, marketplace. We reinstituted risk on trading. That switched a lot of things. It turns the buttons and it pushes something, the algorithms, into a different mode. Now they're just looking to do buying volatility, buying underlying volatility, selling the VIX and buying the underlying volatility in the components. Produces a bullish market, produces a market that kind of goes up, and our pullbacks are like minuscule, but you die for them because you need to get it so that you're willing to buy it again. Because in the back of your mind, as a day trader, you're like, hey, I can do this. And the next thing we know, somebody's going to come in and pound this market back down. Now, what we've got, I do believe I'm going to leave this as the minuet wave A. I'm going to leave this as 5 down. The alternate has to be that this somehow is an ABC, still an A wave, but it's an ABC and not 5. Now, another possibility, another alternate, if it is an ABC, maybe that's the whole 4, and we're just going to start to go up now in that 5th wave. How that then fits into this little bit longer picture of a market that is likely going to continue to rise into the 4th quarter of 2025. Well, we're not there yet. We're not into the 4th quarter. What we got staring us in front of moving into that 4th quarter is a decent, probably sizable, minute 4th wave. That's what I'm looking for. If it took 2 days to get the A wave in and maybe 1 day to get the B wave in, wow, what's it going to say? 2 days and then we get the C wave and we're done and we start to rise in 5, and it'll be 5 that'll take us through August and September and maybe extend into October. That's why I'm thinking, okay, we could be 1 ahead in terms of the degree. That is just wave A of minuet wave A. And that this could be sub-minuet wave B of minuet wave A. And wave A will be 5, 3, 5. Nothing says it can't be. We just, and I've spoken about this before, that I need to, and I think we all need to be careful about counting too fast. When we count too fast, we'll be like, well, it's all over. Okay, let's just go. And meanwhile, it could be just the A wave. We come up in a B and we still come back down in a C. And not just ding, 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 we're going up in wave 5. So let's just be a little cautious. Let's just be a little bit like give it the benefit of the doubt that maybe it is just the sub-minuet wave A of minuet A. And we got a B wave and a C wave to do before minuet wave A is done. And then we come back up in a B wave to form minuet wave B, and then we drop back in a C wave. Now that could take us through August. That could bring us into September. That's my thought. All right. What can we look for tomorrow? Well, we see here on our, I'll go back up to the hourly chart for right now. And let's open this up a little bit. Our moving averages actually were in alignment to go down until we opened. But the only one that really, the others are reacting, don't get me wrong. But the one that really started to climb, of course, is the 8. That's the smallest. And it soared right through, sliced right through that 30, with the 30 turning up pretty aggressively, and the 78 turning up aggressively, and the 200 going flat. So if we pop, I think that 200 can stay flat and start to rise, but what's going to have to happen is the 78 is going to have to come up through it. The 8 will be the first one through it, but then the 78 needs to go, and the 20, the 30 needs to go up through them, through that 200, if indeed we're just going to keep sailing higher. So on the hourly, not even going up to the daily, on the hourly, because the daily is going to show us that we're still in alignment to go up, and there it is. So no problem for the daily to say, yeah, okay, fine. Yeah, we went down, now we're back up. And in fact, we could almost say that's a bullish engulfing bar. Not quite, because it didn't totally engulf it, but it sort of looks like one. Let's see if it acts like one. So back down to my hourly chart. So really, I'm going to give it space. I want to add one level here, 786. Now again, because if I'm counting this as 5, whether it is the sub-minuet wave A or minuet A, I'm still counting it as 5, which means that I'm not expecting the B wave to get up to either equal this starting point or to exceed it in an irregular. I'm not looking for that because this is 5. I'm looking for a 5, 3, 5. Now, I ran fibs up to that high, the closing high. So if we start down pretty much in the Globex and then continue lower as we're going to put in a C wave, then what are we looking for? Well, we have 0.618. Let's go over the most common. The first most common is that wave C, which is what it would be, what degree, we're leaving that aside for right now, but a C wave would be equal to the A wave, and that shows up at 6138. Now that takes us just below on a minute degree, below 236. No problem. I think that's where wave A was going to finish anyway, here, not necessarily there. So another reason to possibly say maybe it's just sub-minuet wave A, and the other minuet A will finish here once we get through the C wave. For most common, C equals A, 6138 or 6139, maybe even 6140, good enough. What comes next? 1.618. Where's that? 5996. So we're down to that 6,000 level. I can go back over to this to the SPX, and we have 6,000 as strong support. It's been there. You heard me this morning. It's been there for a while. 6,000 has been strong for a while, and it's sat there for several months. We can go down and give it a look. We can go down and give it a test. I say it holds. And then maybe that's minuet wave A. And then we come back up in a B wave. Now that 6,000 level would hold until we have to come down again, right? If we're going to come A, B, C, minuet wave A, B, C, minuet wave B, 1, 2, 3, 4, 5, minuet wave C. We can come down to 382 because that is actually the most common for a fourth wave, laying out how we can get there. I hope this makes sense. And I hope that and that I know I'm talking a lot, but there's a lot to put together so that we all can kind of go like, oh, okay, I can see how that might be down a degree, and it's actually the sub degree versus the minuet. It's going to take more time for the whole minute fourth wave to unfold. Because what really presses on me is that minute four is going to be done in 5 days, right? A wave A 2 days, B wave 1 day, C wave 2 days. We're going to be done in 5 days? Amazing. That would be amazing to me, considering how long it took to get to the top of that third wave. All right. So spot gamma levels will be updated tomorrow. Uh, Economic data, we have U.S. trade deficit and the S&P 500 U.S. services PMI and the ISM services. I don't think they're going to rock the world. They didn't last week on the manufacturing. I'm not sure that the services are going to rock it either. We shall see. We shall see. But that's what's coming out on economic data wise. And if you're listening to the NASDAQ, I know I do a lot of repeats here, but um, there's just a lot. And there's a lot that goes through my mind when I'm trying to put together this analysis. So I'm hoping that you all are going to follow or can follow along with what I'm talking about. If not, please feel free to ask questions. Um, but if you want to show your own count, I am welcoming that at all as well. But let's be respectful of each other and put something together so that we all can benefit from each other's analysis. All right, next update will be tomorrow morning.